With over 50% of the Simply Good Foods company's revenue coming from the nutritional bar, protein bar category, the race is on to further diversify its product mix due to some near-term headwinds. Just to recap for you guys, the Simply Good Foods company is a better for you functional snacking portfolio that includes Atkins Nutritionals and Quest Nutrition. It also included Simply Protein, but on September 24th of this year, the Simply Good Foods company did sell the Simply Protein asset to a newly formed organization that is being led by the company's Canadian-based management team that was already responsible for the brand prior to this transaction. The revenue of Simply Protein has been around $10 million, but contributed negligible amounts to the company's adjusted EBITDA. The goal of this transaction is really just to focus Simply Good Food Company executives on the Quest Nutrition and Atkins Nutritionals brand. But it is kind of interesting to note that because I'm assuming Simply Protein really was an inspiration for the Simply Good Foods Company's name. But I want to run through the fiscal year 2020 quarter 4 earnings for the Simply Good Foods Company, which this quarter for them ended on August 29th, 2020. First, want to just run through some financial data real quick. I am going to add some of the slides that the Simply Good Foods Company is kind enough to upload when they do have their earnings report and earnings call, so it's easier to follow along. So I'm going to add that to my video as well, so it's easier for you guys to follow along. The fiscal 2020 quarter 4 revenue for the Simply Good Foods Company was a little over $222 million, which was up 59.7% year over year and up 3.3% quarter over quarter sequentially. Atkins Nutritionals was down 8%, and what makes that up is volumes was down 6.6%, and pricing pressure hurt the brand 1.4%. Reporting periods were a little bit off by a week, so if you exclude that extra time in fiscal 2020 comparable to fiscal 2019, the Atkins brand would have been essentially flat during this quarter. Now, Quest Nutrition was up 67.7%, and this is the third full quarter of sales that was counted in the financials. So that number is acquisition-based comparative growth and not year-over-year growth. With some quick calculations just to get to a year-over-year growth and just a broken out revenue number for the Quest Nutrition brand. This quarter, they had their best quarter under the Simply Good Foods Company at $94.2 million in revenue. And the Simply Good Foods Company is saying that's up mid-single digits on a year-over-year perspective. Now, talking a little bit further about Quest Nutrition, if we look at the retail takeaway and tracked channels, which does make up about 60% of Quest Nutrition's total revenue. That growth of retail takeaway was 28.4% year over year, which was better than the category average by quite a bit. This growth was driven by a whopping 95% growth in cookies and 72% growth in chips, but also RTDs performed well for the Quest Nutrition brand. Alternatively, the Quest bars, which is the main item within the Quest Nutrition portfolio, was down 5.8% year over year. So that's what essentially dragged down the overall performance of the brand. It's important to note that Quest bars perform much better than the bar category, which was down 12% as a whole. E-commerce increased 25% year over year and now accounts for 21% of the brand's gross sales. Quest Nutrition and the Quest bar continue to be the number one selling protein bar on Amazon. The difference in performance from cookies, chips, and bars is the perceived use occasions with consumers. Now, if you think about cookies and chips, those would fall into something more traditionally consumed at home as a snack. But bars are used as more portable on-the-go snacks, which is tied to consumer mobility that has been restricted throughout the coronavirus pandemic. Quest Nutrition continues to have massive trouble in the specialty channel as sales now only make up 9% of the brand's gross sales. Now, if we move into the Atkins Nutritionals brand, break that down a little bit further, The retail takeaway mostly followed Quest Nutrition, with the bar category struggling with it being down 11.4% year over year. On the other hand, RTD beverages performed worse for the Atkins nutritional brand comparable to Quest Nutrition, and they had declines of 8.3% year over year. But similar at-home snacking SKUs that fit into Atkins Indulge Confections lineup continued to be up at 17.3% year over year. Atkins has improved, but it's still down from temporary lower consumer interest in weight management, fewer on-the-go usage occasions, and weakness in the mass channel. Simply Good Foods estimates that 40% of the consumption of Atkins products occurs away from home, therefore lower on-the-go usage occasions impacted the brand. The biggest bright spot for Atkins was their performance in digital sales. The quarter had e-commerce sales growing 55% year over year, and e-commerce now makes up 9% of the total gross sales for the brand. Now, just to kind of look at channels outside of digital, Club did perform great, but mass struggled, as I kind of already noted, with the rest being relatively flat. Atkins' total buyer growth was significantly down this year, but buy rate was significantly up. An analysis by Simply Good Foods shows that the Atkins brand switching was minimal as consumers stayed relatively loyal. Now, just an additional graph on retail takeaway trends. Interesting to just see this, how it has evolved from the beginning of the calendar year and through the COVID-19 effect. Just give you guys a quick recap here. Pre-pandemic, both of the brands were growing strong at the beginning of the calendar year. When you jumped into fiscal quarter 2 for Simply Good Foods, there was an intense stock-up period. That was followed by the second month of the previous quarter, which was essentially a rebalancing of purchasing as consumers used extra personal inventory to preserve cash during the restricted living situation in April. As the states and the American economy started to open back up in May, you could see purchasing from tracked channels resuming closer to pre-pandemic levels, with growth heading into July. Now, August to current October, you're seeing an easing from retail takeaway again as Americans face another possible tough period, with cases of COVID-19 rising again and states ratcheting down on openness. Now, for the last part of this video, I do want to just share some additional commentary on where I see the current and near-term future kind of state in the market in relation to Simply Good Food Company's brands. Now, my assumption, or I guess thesis, around the macroeconomic activity that's going to happen in the near term in the United States is that we won't go into a complete shutdown like we did during that kind of March, April timeframe. I think we've learned way too much about the virus. I think we have a bunch more tools in our tool belt in terms of therapeutics and just understanding how to treat the virus. But I do fully expect in calendar Q4, Q1, that some states or some cities within states will start to ratchet down and create some tighter restrictions on movements in business. Now, even if the government imposed restrictions don't happen at that level, I still think there's self-imposed consumer restrictions that are happening regardless of what the government is saying. There's still a lot of people that are scared. So any company needs to be aware that there is a subset of the American consumer that has chosen not to shop in store. Alternatively, I do think we'll see a second stimulus somewhere in that December timeframe, which will definitely help consumer spending. So there's going to be some pluses, there's going to be some minuses that I think will generally wash themselves out to being net neutral or a little bit net positive for the business in which the Simply Good Foods company operates in. Now, I want to talk a little bit around like 5 of the most important areas that I think Simply Good Foods company should be focusing on. First one is around winning the right shelf space. Now, any shelf space at this point is great, especially when a lot of the large retail channels are simplifying their inventory. But I also think it's important to find the right retailers to have your product on shelf during the kind of shifts in shopping behavior from COVID-19. You have shopping trips that are definitely becoming streamlined. So if it's something like a mass retailer, consumers are really beelining to where they need to go. They're really being efficient when they're in the store, and they're buying more than what they normally would because they want to lessen the frequency of their shopping trips. Now, outside of mass retail, a lot of the channels are deteriorating as consumers are looking for convenience, cost effectiveness, proximity, and perceived cleanliness in the retailers that they shop in. If any of those retailers have essential items, they are not necessarily having to shop in one retail channel that has historically stocked certain products. If these products are available at a convenience store and a consumer is out and about and it makes it convenient and it's cost effective, they feel like there's some cleanliness there, then they're gonna buy those items there. They're not gonna wait and maybe go to a Walmart or go to a grocery store. They also need to shift the use occasions of their products within the consumer's mind. So because Simply Good Foods Company is made up of more than half of their business comes from bars, and a lot of that is tied to consumer mobility, Simply Good Foods Company really needs to focus on helping consumers understand how they can utilize their products at home. Now, on the Atkins Nutritionals brand, I know they're going to be jumpstarting some new Rob Lowe commercials that are really focused on some of that messaging to consumers around at-home consumption and additional kind of COVID-19 storytelling around benefits like the importance of weight management during the pandemic, some of the added vitamins and minerals that help support the immune function in some of their shakes, and just overall how to better approach snacking when you're at home with the Atkins Nutritionals brand. The Simply Good Foods Company also needs to really lean in and focus on digital. Digital is essential right now, especially when we are perceived to have a pretty harsh winter ahead of us with some of the restrictions kind of coming back and a lot of people just deciding not to shop in store. Need to really lean in on the digital shelf. Both brands have done great at that. They've captured a lot of sales. Atkins Nutritionals has definitely grown since that brand went public, I think a few years ago. But outside of them investing further in direct-to-consumer and on their marketplace strategy, they also need to focus on some of the omni-channel retailers that are focusing a ton on their digital capabilities as well. Simply Good Foods Company also needs to stay long within their strategy because the Simply Good Foods Company is well capitalized, is creating cash flow. They need to continue operating effectively through this tough market. And because of that confidence that they have by operating in this tough environment, they've taken a bunch of reps, they've been doing pretty well. I think then they need to stay long-term in terms of their strategic lens, and they need to be making moves that are best for the long-term perspective of Quest Nutrition and Atkins Nutritionals. Because I believe the long-term winners are those that will be growing household penetration ahead of the category. So currently, Simply Good Foods Company is in a strong position, and I believe if they continue to keep their eyes on the prize, they will continue to have future opportunities if they stay patient in a strong position with financial flexibility. The Simply Good Foods Company also needs to focus on diversification of product formats. Cookies, chips, and confectionery continue to drive growth for the portfolio. They need to stay heavy on the innovation product development pipeline outside of the bar category. This will increase use occasions and use states, thus helping create incremental consumption and new customer acquisition. Now, I said I was going to give you guys just 5 areas that the Simply Good Foods Company should focus on, but I want to give you guys a bonus one because this one is going to be a little bit more pertinent at the beginning of the calendar year. On the earnings call, an analyst asked the question around mergers and acquisitions because they are just finishing up the Quest Nutrition integration and they just kind of paid off some debt. They're looking at a better capitalization structure right now. They're saying the start of the calendar year, they should be in a really good position to look at some potential acquisition targets. Now, this aligns with something I said on my LinkedIn this past weekend, which I tagged the Simply Good Foods Company in a post regarding that Danone was looking to sell their plant-based protein and nutritional supplements company, Vega. So we'll see if they look at a brand at that level or if they try to pick up a smaller emerging brand within categories that complement the existing brand portfolio. Just want to end on some final thoughts. There's 2 brands within the Simply Good Foods Company portfolio are category leading brands aligned around consumer megatrends of better for you, functional, and on the go snacking. While short-term interruptions are causing headwinds, long-term growth prospects, I believe, are strong. as consumer behavior will return to somewhat normal patterns in 2021, and the brands within the portfolio of the Simply Good Foods Company will benefit from some of those value propositions and consumer interest around weight management and health and fitness, and will continue to regain its value.
Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly, and if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you value in return, and we'll see you guys on the next video.